Garrett Nelson is an analyst at CFRA, and he joins me now. Garrett, what's your diagnosis?
Sure. Thanks for having me. So we really think it's a combination of the three. It's Elon Musk selling a lot of stock. Obviously, the company's largest shareholder, he owns about 20% of the company. So it's really hard to buy when he is just unloading as much stock as he has been over the last month or so. It's increasing competition from the likes of Rivian, Lucid, and traditional automakers who are dramatically increasing their investments in electric vehicles. And there's other factors such as these semiconductor issue, chip shortages and supply chain issues, which we see lingering well into 2022.
But the first one you mentioned, which are his sales, are nothing fundamental about the stock. You know, so if I were a buyer and I liked it for all the other reasons, his sales would be a gift. It gives me an entry point 20% lower than what I would have had a few weeks ago.
We think that's right. However, we think the stock was overextended to the upside, and it still is. The valuation, in our views, is still hard to justify. Still trading north of 100 times our 2023 earnings estimate. So that's still a multiple. We're still cautious. We have a hold on the stock. It's still slightly above our price target. However, we do think the valuation is becoming more interesting here following this sell-off.
We're at 940. Remind me what your price target is.
It's 875.
And 875 means, while we could have a little bit more downside, you're starting to see this valuation making sense to you. So then what do you think we should consider in terms of the legitimate competitive pressures from something like Rivian? On the one hand, Motor Trend's car of the year. On the other hand, they're a minnow compared to how big Tesla is.
Sure. We still think Tesla has major competitive advantages longer term. When you look at their goal being to grow their annual auto volumes by a factor of 40 over the 500,000 autos that they sold in 2020. So they want to grow that to about 20 million units a year in the year 2030. So we think they have a significant significant cost of capital advantage. However, what you are seeing from the Lucid Air, for example, is a product with specs that are on par or even superior to a Tesla product, which we haven't seen in the marketplace until recently.
Absolutely. And maybe it's a preview of what's to come. But then they did just announce, or maybe it was a Musk tweet where he said Cybertruck's now going to be a quad motor. Are they going to be able to just keep up with all of these new features competitors are offering?
It's going to be difficult. And you look at Tesla's market share of the U.S. EV market, they have close to 80% market share of all electric vehicles sold in the U.S. It's hard to imagine that market share growing any further from here. And that's really where Tesla has excelled over the last 5 or 6 years, is growing that market share dramatically and becoming the major player. But you're going to have a lot more competition. You're seeing it now, and you're going to have a whole lot more competition showing up in 2022.